Credit worries on Wall Street, storms brewing in the Atlantic, and the Federal Reserve trying to save the day. Are investors just plain old spooked regardless? Good morning. I'm Neil Cavitto. Let's get the bottom line, shall we? From Ben Stein himself, along with Tracy Burns and Charles Payne, along with Stuart Varney and Peter Schiff. Ben Stein, you say this could be a perfect storm for buyers. What do you mean?
I mean that the credit crunch is way overblown. The financials are being given away. They're so unbelievably cheap. Many of the resource companies have gotten really whacked and are cheap at this point. The subprime problem is a problem, but it's a tiny problem in the context of this economy. The storm is a problem, but it's a tiny problem. Meanwhile, it's as if nuclear war has struck the financials and really struck the whole market. It's a buying opportunity, especially for the financials, maybe that I've never seen before in my entire life.
Tracy?
It is a buying opportunity, but I think the subprime is a bigger problem because we have a confidence issue going on in the market now. So whether it's a numerically small or large issue, it's affecting people's psyche about what to do in this market, and we don't want them to pull out. It is a buying opportunity. They could do really good things for their portfolio right now, assuming they have the stomach to get through this, because we're not done with this by any stretch. We don't know where this subprime thing is taking us.
And that's pretty much your argument, right? It's not all over yet.
No, this is just getting started. It's not just subprime. You know, this is a problem for the entire mortgage industry. It's not just people with bad credit that committed to mortgages they can't afford. It's not just people with bad credit who are going to see their home equity vanish. And it's not limited to mortgage credit. Americans are going to have a difficult time borrowing money to buy cars, to buy furniture, to buy appliances. You know, foreigners around the world have been lending us money for years. They're now finding out that we can't afford to repay. This is going to be an enormous credit crunch. The party is over for the United States. We cannot continue borrowing to live beyond our means and consuming foreign products.
You must be a laugh right at a party.
No, I'm pretty fun at parties.
Okay.
I don't just talk about this
Stuart, what do you make of that?
I think it is a short-term buying opportunity. You'll get a nice bounce in a few stocks, but long-term, I don't think you're going to see 14,000 on the Dow again anytime soon. The economy is slow.
Anytime soon?
Oh, in the next 3, 4, 5, 6, 7, 8, 9, 10 months. I don't think it's going to happen.
It's a wide range.
Yeah, I'm trying to give myself some room for maneuver here.
Okay.
No, long-term, this market is going to edge down because the economy is slowing. Tax hikes are coming, but you get a short-term bounce and a couple of nice stocks and make 5%. Nothing wrong with that.
All right, we are going to be looking at that issue of tax hikes that potentially could make this problematic going forward. But Charles Payne, what do you make of this issue that maybe the subprime thing, as Ben pointed out, got overblown?
Well, in of itself, it certainly is overblown, but subprime is not the problem. It never has been a problem. It's a symptom of the problem. But what we really have is on Wall Street, a lot of greed and arrogance. A lot of these folks, these hedge funds, just lost their discipline. But to Peter's point, you know, I got to tell you, Peter's rant is always anti-American under the guise of financial advice. It's not true. Let me tell you, first and foremost, America is still the straw that stirs the drink for the entire world. When America's stock market was down this week, the rest of the world's markets tumbled a lot more. So I'd be much more worried about an overextended euro that's way inflated than I would be about American subprime.
See, Peter, a guy with a yellow shirt just called you a fraidy cat.
It's not being anti-American. I'm just recognizing the problems of our economy. And we are not the engine of the world economy. We're the caboose. Sure, foreign markets went down along with ours, but it's because of the money they're losing on the money they lent us. It's because of problems with U.S. dollar-denominated asset-backed debt that they own. It's because of us. Ultimately, they're going to shrug this off. The global economies are going to go up. The global stock markets are going to thrive.
One at a time. Charles, go ahead.
They don't sell products to us.
Products to?
You know,
Well, guess what? Listen. All I'm telling you right now is that the fact of the matter is you cannot take the U.S. out of the equation and think the rest of the world is going to keep going without a beat.
Charles,
no,
remember,
this week was proof of it.
No,
the world almost went off a cliff because we have a problem with the smallest part of our economy, the subprime part.
Give me a second, Charles. We're not buying products from the world. They're giving them to us. They're subsidizing our consumption. When they let our currency collapse, foreigners are going to see the biggest boom.
Well, let me, Ben Stein, let me get you back in this. I know you're concerned about the dollar as a longer-term worry, but do you think we are using this whole subprime issue as an excuse that there are bigger problems afoot here and that real market pros know it's an excuse?
I think the real market pros are shorting the hell out of this market, and I think this has been a speculator's wild holiday. Peter is right. There are long-term problems with the dollar, but we haven't defaulted on anything more than the most minute part of our obligations to foreigners. The dollar is still a perfectly trustworthy currency. The dollar is the reserve currency for the whole world. So what Peter's saying there, I think, is a bit off the mark.
Well, look, the dollar's down.
But subprime is tiny. Subprime is a tiny blip.
It's not tiny, and again, it's not just subprime. It's the entire mortgage market, right?
All right. Well, Tracy, you're disagreeing with.
Simply wrong. Well, you're simply wrong about that.
No, I'm not.
You're simply wrong.
To Ben's point,
defaults for the whole mortgage market are tiny.
No, but it's good. Just give it time. Wait till all these mortgages reset. Wait till people realize.
So you're saying it's going to be bad.
What? The problem is it's the traders.
The longer up the road.
The problem is we hear from these traders on a day-to-day basis. Other business channels go down on the floor, they hold the mic up to the trader, and they say, "How was your day?" And the trader says, "Horrible." It's not horrible,
Why are you
though.
looking at other business channels?
I'm doing research. Research for the future, Neil.
It's not a nice thing to be saying here, young lady.
But I'm
right,
saying
Stuart,
that
what do
it's
you
not
think
great.
of
No, but what I'm saying is...
I have lived in America for 32 years. In each of those 32 years, there's been a trade deficit, and we've all been waiting for that run on the dollar.
Have you been here legally?
Yes, I've got a green card.
You're not going to have to wait much longer.
We have not yet had a dollar crash, and I don't think we're going to see a dollar crash anytime soon.
Absolutely.
You're exaggerating.
No, we're going to see one. You remember who's the one that predicted on this show that we're going to have these problems in the mortgage market?
Well, a
and the real
broken
estate
clock
market?
is right twice a day.
I've been right a lot more than twice.
Okay. Charles, let me ask you this. Is the message going forward to the markets, be cautious every time we have a run-up after a big run-down because it's a suckers-type rally? What do you think?
Not really. Listen, it bounces around a lot, but we saw this last year. We had not obviously to the extremes that we're seeing it this year. We saw it the year before and the year before and the year before. The reality is that the fundamentals are absolutely great. And as far as a weak currency is concerned, everyone would like a weak currency. China wants a weak currency. Japan wants a weak currency. And the fact that Europe doesn't have one is hurting them tremendously. So if I'm looking to place money, I would love to buy American stocks on this dip. I'm not saying you have to buy everything tomorrow morning or Monday morning. What I am saying, though, is that this is an incredible opportunity. We've seen this movie before. And Peter, you know what? You can make these predictions and ultimately be right after a couple of years.
All right, guys, I want to step back just here to wrap things up in this particular segment. We had the Federal Reserve intervene by cutting the discount rate, signaling that maybe bigger cuts are to follow in other key rates. They've flooded the banking system with a lot of money to kind of calm nerves. Is the worst over or the worst yet to come? Charles, you were just speaking. What do you think?
I think volatility is going to be here until we can look at the books of major financials, so that means until the next round of earnings, but I think the worst is over.
Ben?
Well, I think stocks will be a heck of a lot higher a year from now than they are now.
Tracy?
Yeah, but we have more volatility to go, at least through September.
Stuart?
The big banks, the central banks, still have plenty of big guns to fire. They'll fire them when necessary. The worst is over.
Peter, meanwhile, I guess razor blades are in order?
The worst is yet to come. The fundamentals are not sound. They're awful. If the fundamentals were sound, we wouldn't be having these problems.
All right, fair and balanced, all views discussed here. All right, one silver lining in the market's recent downturn is you can grab some top-quality stocks at pretty much bargain prices. The 5-star stocks, our gang says, are priced so low, you'd be crazy not to buy them. All right, welcome back. It is not every day you get to buy blue chip stocks at discount prices, but our pros say you can do that right now. It's time to get more for your money. Ben, what have you got, my friend?
Well, the financials, as I keep saying, are just super bargains. I particularly like Merrill Lynch, which is an astonishingly well-run company. You know, a couple of days ago it was trading at barely more than 7 times earnings. Financials typically trade at a low P, but this is a joke. This stock is, they might as well be putting it in cereal boxes and giving it away. That's how cheap it is.
Charles, what do you think of that?
Yeah, I like the financials, too. Merrill isn't my top pick in the group. I think Bear is probably the cheapest, although the riskiest, and some of the others are better. But, you know, the financials are a great place, absolutely.
So what are you doing, Charles?
I like St. Jude Medical. I just think it's one of these great companies. They're in, the heart valves, defibrillators. They're taking market
comes in
share.
handy
Their
in
earnings
this
are
market.
phenomenal.
Yeah, go ahead.
It definitely comes in handy in this market, and it's one of these things that's going to do very well. Eventually, they're going to be taken over, probably by Johnson & Johnson.
Ben, what do you think of that?
I think it's an extremely good pick, and I would not. I would buy it. I don't usually buy individual stocks, but I might buy that one.
Interesting. All right, Peter, what are you doing?
Well, I mean, if you're going to buy something in the United States, you might as well stick with the gold stocks. I think they've gotten beaten up in the last couple of weeks with a lot of liquidity problems.
Didn't they also get beaten up on the idea that there's going to be a slowdown?
Well, there's going to be a slowdown, but there's also going to be inflation, and that's very bullish for precious metals. It's bullish for gold, and I like Newmont Mining. I haven't bought a lot of it recently. It's been a laggard, but I like the action in the last couple of weeks. I think it's bottomed out, and I think the stock's going to lead on the way up.
Tracy?
I don't know. They have a lot of management changes going on, and gold didn't respond the way we would have hoped during this whole equity crisis. So
it held up better than a lot of other assets, and again, it's a liquidity problem right now. People are having to meet margin calls. They're getting redemptions. They're selling whatever they can. There are buyers.
Are they going to meet them with gold?
Right.
Well, they have to sell what they can to get cash.
All right, Tracy, what are you doing?
I, again, like the financials, I like Goldman Sachs. It's like getting Dolce & Gabbana on sale. This is the creme de la creme of Wall Street. It's cheap.
Isn't it still up substantially year over year, though?
It is down, and it's probably actually going to go further, and I think that people should start nibbling at this thing.
Peter, what do you think of that?
Look, stay away from the financials. They're toxic. They're not cheap. They're expensive. You think they're at
heart
well, let me
problems for being
finish.
so pessimistic?
Let me finish. You think they're at low PEs. They have no earnings. Their earnings are going to disappear. I remember a year ago when
earnings. Their earnings are huge.
Ben, last year when people were
talking about
last year when people were recommending home builders and they were talking about they're at 5 or 6 times earnings, I said those earnings are fantasy. They're not going to be here.
Fantasy about that.
No, I'm talking. No, there's a lot of losses coming up in the future. These financials are going to get hit, and they're going to get hit hard. Don't believe what these forecasts are for future earnings. No, it's not. They're going lower.
All right, Peter, I wish we had more time with you. I know you want to continue that expose on Santa Claus. He's a fraud. But Peter, great seeing you. Great seeing you.
Nice to be here.
Fair and balanced. You get all sides here. Well, the market's down. You're losing money, and the Democrats, some of them at least, want to raise your taxes. Is now really the time to do that? Find out why so many here says yeah after this.